Happy Monday, everybody. I hope you had a great weekend. We're headed into the first full week of the second half of the year. Let's review last week and let's preview this coming week. Last week, of course, was short but packed with action. It seems these days that everything outside the market news feeds are running the show. Let's see if the second half is anything like the first half. Stocks kicked off the week on Monday with momentum building on the prior week's rally to push the S&P 500 to new record territory. Hopes that the White House's big tax bill would pass soon, paired with better than expected Chinese manufacturing data and softer German inflation, helped keep the mood upbeat. Flurry of positive sentiment lifted markets into the close. The Dow was up about 0.5%, S&P up about 0.5%, and the Nasdaq was up about 0.75%. Markets wobbled on Tuesday as investors digested Monday's strong start. Early losses tied to fresh tariff threats, particularly aimed at Japan, weighed on big tech and consumer names. But solid U.S. data, including a stronger than expected ISM manufacturing PMI and resilient JOLTS job openings, did help offset the weakness. Comments from Fed Chair Powell in Portugal leaned dovish, keeping hopes alive for a possible September rate cut. By the close, the Dow added nearly 1%, S&P slipped by about 0.1%, and the Nasdaq finished just slightly lower. Equities did find fresh fuel Wednesday, despite a weaker than expected June ADP employment report, which showed private payroll shrinking by 33,000. That's the first decline in over 2 years. Investors did brush off the soft data, focused instead on the upbeat headlines. President Trump announced a new trade deal with Vietnam, and AI optimism got a lift as Oracle and OpenAI expanded their partnership. Tesla jumped about 5% on better than expected quarterly deliveries, helping tech lead the way. By the closing bell, the Dow was little changed. S&P 500 had climbed nearly 0.5% to a new all-time high, while the Nasdaq gained about 0.5%. Markets wrapped up the short week with a quiet half-day session ahead of the 4th of July holiday. Traders kept one eye on the official jobs report that came a day early since markets were closed on Friday, and the non-farm payroll report came in strong, above expectations. The unemployment rate also fell. This mostly implied that the hope for a July Fed rate cut was off the table, but growth was still strong, a mixed picture. Never fear, if the eco data doesn't support a big move, leave it to DC. Vietnam trade agreement was announced and promised more to come. And then the tax mega bill, yes, also known as the big beautiful bill, was looking good as markets notched some solid gains. The Dow was up 0.75%, S&P 500 added almost 1%, and the Nasdaq edged up about 1%. S&P and the Nasdaq at records. For the week, the Dow was up 2.25%, S&P up 1.75%, the Nasdaq was up a bit over 1.5%. Let's look ahead. Investors will be turning their attention back to the Fed, trade headlines, and some fresh data. Small business optimism is one of those little reports, but I do think it matters. We'll get that tomorrow along with Fed one-year inflation expectations. The minutes from the June FOMC meeting will be released on Wednesday. Markets are going to comb through that for details, for any clues about how policymakers are balancing cooling jobs data with sticky inflation and the risk tied to higher tariffs. I'm not going to expect much here, but it'll pull some oxygen for the room if nothing else does. Now, Fed heads are back. Musalem and Daly are both scheduled to speak on Thursday. Any comments about timing or likelihood of a September rate cut could steer bond yields and equity sentiment. In case you forgot, on the geopolitical front, the July 9th tariff deadline with Japan looms large. The White House continues to float potential 30 to 35% tariff rates if a deal isn't finalized this week. The weekend was full of news about this, and watch the mail. 12 countries are set to have their tariff letters mailed today. I do hope their mail service is better than mine. Weekly jobless claims due Thursday. The rally is running into some familiar headwinds with softer labor numbers, stubborn inflation, and tariff deadlines that could easily shake things up. As we roll into July, investors will be watching whether the incoming economic data keeps the Fed on track for a September cut, soft enough to justify easing, but not so soft that growth fears take over again. Please check back in on Friday for another planning video and call me to do that risk audit I keep talking about. For now, let's see what the second half of this year brings. Fireworks for sure. Have a great week.